Hello learners, welcome to today's lesson. My name is Mr. Muzondo from Herentals Mabvuku. We shall be looking at control accounts. Now, what are the objectives of our lesson? What is it that we want you as the learner to take away from this lesson? So, here are our lesson objectives. So, number one, you should be able to define a control account. Number two, you should be able to state the uses of control accounts. Number three, you should be able to prepare control accounts. Now, these are our lesson objectives. We need to ensure that by the end of the lesson, we're in a position to define a control account, we're in a position to state the uses. We should be able to articulate reasons for preparing such accounts. Then, having done that, are we then in a position to prepare a control account? Okay. Now, what is a control account? What is a control account? A control account, it is a total account. It is a total account. Now, what do we mean by that? It summarizes the individual ledgers that it seeks to control. So basically, we have two control accounts. The first control account you would remember from your O-level accounting is the sales ledger. The sales ledger, the control account. Now, what does it do? The sales ledger controls so it controls the debtors ledger. So that's basically what you call a sales ledger control account. What does it seek to do? It seeks to control the debtors ledger. Now, after the sales ledger control account, we also have what we call the purchases ledger control account. What does it do? It controls the creditors ledger. Okay, now we have defined what a control account is. A control account is a total account. Right. Now, why do we prepare control accounts? Now, let's look at the uses of control accounts. This is a very popular question with ZIMSEC, particularly in paper 2. What happens? ZIMSEC, they normally throw theory questions. But experience is that learners concentrate more on the working side. Now, we need to ensure that we don't lose marks unnecessarily, right? Let's make sure we understand the uses of these control accounts, because it is from this understanding that maybe when you're asked to prepare a control account, it then becomes very easy because you know why you are doing that. Now, reason number one. They act as an internal check on the arithmetical accuracy of the ledger. What do you mean by that? The sales ledger, it records all individual debtors accounts, right? What then does the sales ledger control account seek to do? It then seeks to check if there has been, or should we say, has there been any errors in the sales ledger or the debtors ledger, right? Good. Now, reason number two, or use number two, it is to deter fraud, to deter or to minimize fraud. How do we do that? We deter fraud simply because we have two separate persons, one who prepares the debtors ledger and the other who prepares the debtors ledger control account. Now, that's an internal check. That's an internal check which ensures that we minimize fraud. Number three, to locate errors. We locate errors. Now, how do we do that? Remember we said, a control account is a total account. That's what we said. If there's a difference between the debtors ledger and the debtors ledger control account, then there's an error. Where is the error? We now need to investigate. Right? So those are the main, main uses of the control account. Is it okay? Good. Now, what do we then need to do? We've established what a control account is. We've established the uses of a control account. We now need to look at how to prepare a control account. We shall be doing this in the next segment. Let's take a very short break. Thank you. Welcome to our second segment, where we want to prepare the sales ledger control account. Right. We start by the debit side. So we have our opening balance, which is balance BET, credit sales, interest on overdue customer accounts, interest on overdue customer accounts, dishonor checks, okay. We also have maybe bad debts recovered. Right. Let's look at the credit side. What do we include there? We include discounts allowed. We also include returns inwards. Receipts from customers. Bad debts written off. We also have a set off. We also have instances where we have recovered a debt. So this is bank in respect to bad debts recovered. Bad debts recovered. Now, these are the entries that we have in the sales ledger control account. But it is not unusual to have a credit balance in the sales ledger control account. So on the debit side, we shall have the closing balance, to say balance CD, and we have our debtors figure, which is also the balance CD then. Now, this is how we prepare. This is how we prepare a sales ledger control account. A common pitfall amongst learners is this one, and a very popular question with ZIMSEC. It asks about this balance now. There. What does it represent? How is it treated in the statement of financial position? Now, a credit balance in the sales ledger control account, it amounts to the money that the firm owes to its customers. Why would this be the case? What are the instances? When do we have a situation where our firm owes its customers? Number one. Now, we want to explain a credit balance. Credit balance in the sales ledger control account. Right. The first person which ZIMSEC is going to ask you, how is it treated in the statement of financial position? How is this treated in the statement of financial position? Now, it is treated as a current liability. Liability in the balance sheet. Now, one would ask, why would we have a credit balance in the sales ledger control account? It arises under the following circumstances. Circumstance number one, it arises when a customer is overpaid. Right? Suppose an invoice is for $20, but the customer pays $22. It means the firm owes the customer $2. Hence, we treat that as a liability in the statement of financial position. It may also arise in instances where a customer has returned the goods, but we haven't refunded him or her for the services right? So those are some of the instances under which a credit balance may arise in the sales ledger control account, right? Now, maybe it's only good that we consider a debit balance in the purchases ledger control account, right? Now, again, it is not unusual. It is not unusual for a firm, for example, OK procures its cooking oil, suppose from Zimgold, right? OK procures its cooking oil from Pure Gold, but in the books of OK, should OK maybe for some reason maybe overpaid its invoice, may have made a prepayment, maybe given that there is a looming shortage of cooking oil. You might need to secure cooking oil in advance, hence you make a prepayment. How then do we record this in the books of OK, right? We shall then be looking at that situation under our short break here, when we want to say, how do we as OK treat a debit balance in the purchases ledger control account? So let's take a very short break, then we'll meet after that. Welcome to the last segment of this lesson, where we want to explain how to treat a debit balance in the purchases ledger control account, where we had given a scenario to say, in the books of OK, we have the Zimgold account, where the Zimgold is the supplier, right? Now, there's a debit balance in the Zimgold account. How do we treat that in the books of OK? Now, it is treated, we treat this as a current asset, in the balance sheet. Right. So what have we done so far? We have looked at a credit balance in the debtors ledger control account, and we said it is a current liability. How does it arise? We've explained. We also looked at the debit balance in the purchase ledger control account and how it is treated maybe in the balance sheet. Right. What we now want to do is to do a typical examination question. Right. With me here, I have an A-level ZimSec 2015 question. Now this question is from November 2015, paper 2. Now the question here reads, from the following information, prepare a sales ledger control account. Right? That is books for the following information. We have the question. What are we being asked to do to come up with the sales ledger control account? Remember the format that we did earlier on. We are going to be using that format as we attempt this question. Right. So this is our solution. The sales ledger control account. Right. We shall be referring to the question as and when necessary. Sales ledger balance is at 1 August 2014. Now this is our balance BED. Balance BED 19012. right? Let's go back to our question again. We have credit sales to the amount of 40,690. Let's go back to our template. How do we treat this? We have our credit sales there. What was the figure there? $40,690. 40,690. We go back to our question. We have sold the returns to the amount of 240. Sales returns $240. Right. Now, why are we having sales returns on the credit side and credit sales on the debit side? The reason is very simple. The reason is sales returns reduce what our customer owes us. Hence, by crediting the control account, we are by and large reducing the amount of debtors. The amount of the debtors figure may be in our books. The next transaction there is checks received from customers, which shall narrate as banks or bank 39,160. So we have bank 39,160. We also have provision for doubtful debts. Provision for doubtful debts. Now, it is very common. It is a very common mistake amongst our lenders to include the provision for doubtful debts in the control account. Now, please take note. We do not include the provision for doubtful debts in the self-ledger control account. Okay, so we are going to skip provision for doubtful debts and maybe look at the bad debts figure, which is $310. So these are bad debts written off. We say 310. Back to our question. The next transaction is customers dishonor checks, right? Customers dishonor checks. How do we treat that? We received bank 39,160. We received checks, right? But now this check has been dishonored. What do? We need to then debit the control account. So here we have dishonored check. Dishonor check. To what amount? That's about $500 there. That's about $500. So we've explained why we are debiting the control account with the dishonor check amount. Right. Let's go back to our question. The next item there is discounts allowed. The discounts allowed again, whenever we have a customer who is paid, we allow discounts, maybe to encourage prompt payments, to discourage bad debts. So what is our figure there? Our figure for the discounts allowed is 420. We have 420 there. What is the next transaction? The next transaction here is debit balances transferred to the purchases ledger. So it is not unusual for a firm or two firms to be doing what you call intertrading, where the firm happens to be a supplier, it also happens to be what? To be a customer. Right. Now, this is where we have a debit balance being transferred to a purchase ledger. So suppose customer A owes $30 to customer B, who in turn owes him $40. We need to do what we call a set off. So this is considered as set off $700. The last transaction that we have there is the closing or the credit balance, which we said balance CD is 128. Now let's balance off this account quickly. So here we've got 60,330. 60,330. Hence, our balance CD is 19,500. Now, what is this figure? This is our debtors figure. So, when we are balancing off our ledger account, we are saying our total debits exceed our total credits by how much? By 19,500. This is our balance CD. What does it represent? It represents the total debtors for the month of August. We are going to include this in the statement of financial position as a current asset.